Welcome back to another video. As you guys probably already know, I am primarily an accountant and a bookkeeper. I just so happened to also start a trucking company back in 2021. I've been sharing my experience behind the scenes since 2021. I try to give a unique perspective because I don't drive my truck. I'm just an owner of the trucking business, and I have such a strong accounting background that I typically show you guys my profit and loss, my cost per mile analysis, my QuickBooks. That way you guys can actually see finances and data behind a trucking business. This video is a real consultation that I have with somebody looking for help with their trucking business, specifically about things like, should I file my taxes for last year even if I didn't make any money? What type of QuickBooks subscription should I get? What are the benefits of an S corporation? And so many more topics on bookkeeping, trucking, cost per mile. If you guys want to schedule a one-on-one consultation with me, the link is in the description. I hope you guys enjoy this video. Watch all my other videos if you want to learn how to start a trucking company or grow the trucking company you already have. I appreciate you all watching. Don't forget to subscribe. Cheers.
Don't wanna sleep in, cause I got something to prove. I gotta take what I hate and finally make a move. I think of you and...
Hey, this is Zach Pasquarello. Good, how are you? Is now still a good time to talk? So what do you got going on? Okay, so cost per mile and taxes, two kind of separate things, right? Do you want to focus on taxes first? Did you already file an extension because they're due today? Oh, okay, so you don't have anything to file for 2021? So you started everything in 2021? Or 2022, sorry. So are you just looking for kind of proactively, like how to track your expenses and income and just prepare for taxes? Yeah, first of all, you're definitely going to want to have a separate business checking account. Do you already have that? Okay. Yeah, as long as your business checking account is separate, you're pretty much just going to take all the money that flows in and out of that. It's going to go into QuickBooks. And then with QuickBooks, you can very easily categorize things. So as you spend money, repairs and maintenance, insurance, fuel, you just categorize those things appropriately. And then as money comes in, obviously that just gets categorized as income. And then on a monthly basis and at the end of the year, using QuickBooks, you can very simply generate a profit and loss statement with a couple clicks of a button. And then that is essentially what you're going to use to file your taxes. So you're a single member LLC? Okay, so as an S corporation, that's a little bit different. Yes, that's good. And even as an S corporation, you're technically required to be on payroll as an owner. So you technically need to be paying yourself a quote unquote reasonable salary. And it's a big gray area in terms of the IRS, what is a reasonable salary? So are you the driver or are you just the owner of the company? Okay, so yeah, so in order to basically find out what a reasonable salary would be, just very simply you could look up, is it a box truck or a CDL truck? Okay, so you could just look up box truck delivery driver salary in whatever city you're in, and then you can find a reasonable salary. My only recommendation is to pay yourself as little as possible in terms of your salary, and then take the rest as distributions, because that's how you reap the tax benefits of an S corporation. So you want to pay yourself as, $30 an hour, you could probably even pay yourself, $20 an hour. To me, that would be a reasonable salary for a box truck driver. $20 an hour, 40 hours a week. So you could pay yourself $800 in terms of payroll, running through your payroll processor. So you're going to pay payroll tax on that. Yeah, so I would try to pay yourself $800 a week and then take the rest as payment through distributions. Because for those distributions, you don't have to pay self-employment tax on those distributions, and they're taxed at the corporate tax rate, which is just a flat tax rate. So, becoming an S corporation, you really get the benefits once your net income gets around $80,000, because you are going to have extra fees when you're paying your taxes. Your accountant's going to charge you more to file a K-1 as an S corporation, and you are going to pay some weekly payroll fees. Who are you having process your payroll right now, or do you have anybody? Whenever you do start running payroll, I recommend stay away from QuickBooks payroll processor. Yeah, Gusto or ADP are always the two I recommend. Don't do QuickBooks. They have a very cheap payroll option, and it's completely integrated with your bookkeeping and your accounting software. But in my opinion, that's a bad thing, because they make it really difficult to make adjustments to the journal entries whenever payroll comes out. And if there's ever an error, if there's ever an issue, if anything ever needs to get changed, it's nearly impossible to change the money. And so your balance sheet and your profit and loss statement just get all messed up whenever, because it's fully integrated. So if one thing bad happens or one thing wrong happens with your payroll processor, it messes with your financial statements and your accounting software. So I always recommend, even though it might seem more simple in the beginning, just keep them completely separate. That way you don't have those issues in the long run. Yeah, I mean, I don't file taxes. I primarily just do bookkeeping, and I get my clients completely ready to talk with the CPA and to file their taxes, but I don't actually file taxes. I just do the bookkeeping. It all depends. My average client is like $250 a month. It all depends on the size and complexity of your business, and it ranges from $200 to $500 a month. But typically, my clients are like $250 a month. But if you're just an owner-operator, it's probably going to be closer to $200 a month, because you probably don't have that many expenses flowing through your bank account. How are you paying for your fuel? Do you have a fuel card? Have you thought about getting a fuel card? And if you're getting 2% cash back, then you're getting 10 cents off every gallon, so it doesn't even really matter. I think that's smart. I've heard a lot about Mudflap. Is that working well for you? That's crazy. That's awesome. Yeah. No, I'll definitely look into that. So do you have any other questions about taxes? I mean, you don't. Once you get QuickBooks up and running, it's really, really simple. Do you have specific questions? I always recommend, you're going to spend $10,000 to $20,000 getting this trucking company started. So if you're right around there, that's normal. With QuickBooks, you have several different options with the online subscription. So first of all, you can either choose between desktop and online. I always recommend get the online version. Yeah, you don't need QuickBooks Desktop. Just get QuickBooks Online. That way you can access it from your iPad, from your cell phone, from your laptop. You can access it anywhere. And then just get the most basic subscription. So there's self-employed. Stay away from QuickBooks Self-Employed. That's completely different from QuickBooks Online. So just get QuickBooks Simple Start. That's all you need. It's like $17 or $20 a month. It's really, yeah, all you need is Simple Start. And you can connect your checking account, you can connect your business credit cards directly to the bank feed. So your transactions get pulled in automatically. And then all you have to do is click a couple buttons and categorize your transactions. You could save yourself the $200 and don't hire a bookkeeper. You can really do it yourself. It's really not that difficult. Yes, money you spend through your personal account for your business you can categorize all of that as an owner's investment. It's no different than you taking $10,000 and just depositing it into your business checking account. That's an owner's investment of $10,000, but instead you're just spending $1,000 on insurance, spending $1,000 on tires from your personal account. So you're breaking it up into individual transactions, but that is still absolutely a business expense, and you categorize it as owner's investment. And so the best way to keep track of that is just keep a little Excel spreadsheet. All you need to know is the date, a brief description, and how much you paid. And it makes it so simple. You can even import an Excel spreadsheet directly into QuickBooks. And so all the data gets automatically uploaded into your QuickBooks through an Excel spreadsheet. It's so simple. And then I also recommend try to keep like PDF documents or pictures of big receipts, like anything over $50. I recommend keeping the receipt for that, especially for the owner's investment. Just in the event of an audit, you always want to be prepared, because if you're using your personal account, it might be a little bit more difficult to explain things, but as long as you have the PDFs or the pictures of the receipts, it should be no issue. Do you think you're going to get QuickBooks? That's smart. And then whenever you sign up for your QuickBooks, you can tell your bank feed to import your past transactions. So whenever you connect your bank account, just make sure you choose January 1st, 2022 or December 1st, 2021. Whenever you open up your checking account, make sure you choose that date, and it'll even retroactively pull in all of your old transactions. Well, a couple things. First of all, you're going to want to file a 2021 tax return for your business, because I'm assuming you spent a couple $1,000s in 2021. So even if you didn't make any money, you can still file your taxes and capture that $1,000 loss that you incurred, and that'll reduce your taxable income. Yeah. I mean, $1,000, $10,000, $100,000, however much money you lost, absolutely, you want to capture that, because you won't be able to capture that in 2022. If you spent the money in 21, you can't capture those expenses in 22. Well, I mean, your taxes are due April 18th. But you can file an extension today. You can file an extension, or you can also just file your taxes late, and you'll just get hit with penalties and interest. But if you file for an extension today, then you won't get hit with penalties. And then you said, so you used multiple different personal credit cards to pay for stuff. Yeah. So unfortunately, you're just gonna have to track down all of those individual transactions, and then you can still compile all of them into one Excel file. So even if you use 5 different cards, you can still just have one big Excel sheet. And like I said, all you need to know is the date, a brief description. It can even just be like Home Depot, Walmart. gas station, whatever. A very brief description, and then the amount that you spent. That's all you need. And then just put it all into an Excel spreadsheet, and then you can import that directly into QuickBooks. How do you figure out your cost per mile? It'll probably take me like 10 minutes to go through everything. Do you want me to go through like detailed everything, or do you just want me to give you like a very brief, broad overview? Okay. Give me 1 second. Let me pull up my notes here. Okay, so you need to know how much do you pay for diesel? How much does your truck cost? How much do you spend on maintenance? How much you spend on insurance? Dispatcher fee, factoring fee, how much you pay for 1 gallon of diesel, your truck's miles per gallon, and how many miles you're driving. So, in order to figure out your diesel cost, you just take, how many miles you're driving, your miles per gallon, and then you just divide 1,000 miles by 7 miles per gallon, and that's how you get how many gallons you're going to use to go 1,000 miles. And then you multiply the number of gallons you're using, you multiply that by how much on average you pay for diesel. And so that's going to be the cost of your fuel. And then your vehicle cost. So you can do a couple things here. You can calculate your cost per mile based on like 1 week, 1 month, or 1 day. I always do 1 week. To me, that just makes the most sense. So I'll take how many miles I drive in an entire week. So for example, I typically drive 2,500 miles per week. So I'll just use 2,500 miles for my calculation. And then my vehicle cost, I'll take, however much you're spending per month on your vehicle. And if you don't have a loan for your truck, if you own it completely outright, you still want to capture depreciation on your truck. So there's still some type of expense associated with your truck. Your truck is never free. You have a loan? Okay, so very simply, whatever it is, let's just say it's $1,500 a month, divide that by 4.3. And the reason I say 4.3 is because, a lot of people think just divide it by 4 and you get per week, but there's more. Exactly. Yeah, there's not 48 weeks in a year, there's 52. So divide your monthly truck payment by 4.3, divide your monthly insurance payment by 4.3, and that's what you get your average weekly pay for insurance and your truck. And then for maintenance, it depends on how old your truck is, but for planning your cost per mile, you're not going to take your exact maintenance expense. You're always going to budget like a planned or a forecasted maintenance expense. So for me, I always do somewhere between 10 cents a mile and 20 cents a mile. So if you want to, 20 cents a mile, that's perfect. Yeah, so you just take, 2,500 miles per week times 20 cents, and that's how much every week you're going to spend on maintenance. If you're driving 1,000 miles a week, 1,000 times 20 cents, you're spending $200 a week on maintenance. And then for tolls, if you're driving Pennsylvania, New Jersey, New York, you're probably going to spend a little bit more, but I just guess 5 cents a mile on tolls. It could be more, it could be less, not a huge deal, a couple $100, but I always just say 5 cents per mile for tolls. Yeah, you don't have a dispatcher, do you? Do you have a factoring company? What percent? So you just need to figure what's your average weekly revenue, multiply that by 3%, and that's your average factoring fee. So now we just add up. We add the cost of our diesel, our weekly vehicle cost, our weekly maintenance cost, weekly insurance, weekly tolls, weekly factoring fee. You add all that up, and you should get something close to like between $4,000 and $6,000. And then you can throw in a couple extra $100 for just miscellaneous, DAT load board, a QuickBooks subscription, ELD, just miscellaneous random expenses. Maybe add a couple $100 per week for that. And so now we have the total cost. We just added up all of our weekly costs, and then we take how many miles we're projected to drive that week, or that day, or that month, whatever time frame you're using to calculate your cost per mile. So take the total cost, divide that by the total miles, and all of a sudden you get your cost per mile. And so once you know your cost per mile, it's probably $1.50, $1.80, whatever your cost per mile is, then you can know, hey, I want to make 20 cents on every mile. So I just gotta, when you're negotiating with brokers, take your cost per mile, add 20 cents, add 50 cents, add $1, whatever you want your margin to be. Then okay, I'm not gonna take a load for less than $2.50. That's how you know how to negotiate with brokers based on your cost per mile. And then finally, so I didn't include the driver pay because you're the driver, but let's just assume you want to make $1,000 a week or $2,000 a week. You can also add that in. You can add that into your cost, and then your cost per mile, that'll be your true negotiating price with brokers. If you add in how much you want your take home pay to be at the end of the week, then let's just say your cost per mile is $2 a mile. Then as long as you negotiate with brokers every single time to get $2 per mile, and as long as everything goes according to plan, which it never does, but we can hope for the best. As long as things go according to plan, then you will be confidently making that $1,000 a week, $2,000 a week, however much money you want to make based on your cost per mile projection. Does that pretty much make sense, kind of how I broke it down with the cost per mile? How much are apportioned plates? It's like, so whenever you get your plates, like that's your registration. And so I just renewed my annual registration for my semi-truck, and it cost me $1,900. You know, but what I would do is I would factor that in to my cost per mile analysis and projection. So that $2,000, you're gonna get hit with that once a year. But I would average that out over, you know, divide 2,000 by 52, and that's your weekly cost of having apportioned plates, or weekly registration costs. So any annual fees or expenses that you incur, I would definitely, you know, add that into your overhead, or, you know, capture that somehow in your average cost per mile. Do you have your CDL? Is he going to drive for you? Yeah, he's basically just going to be an owner-operator leasing onto your authority, and then you're going to dispatch for him. Yeah, so you'll, you know, charge 6% to dispatch, and then another 14% for him to run under your authority, and insurance and everything. You'll take, you know, 20-25%. That's smart. That's a good way to grow your business real quick. Are you gonna buy the truck, or is he gonna buy the truck? And then he's gonna lease to own from you. That's really smart. That's a good idea. So do you stay in the Northeast, the Mid-Atlantic? Yeah, like you stay in Pennsylvania, New Jersey, and you're just running that reefer? Nice. Reefer trucks make a lot of money, huh? Yeah, I mean, they make a lot of money, but they need a lot of repairs and maintenance, right?